How much of a surprise has this been for you, and how will it impact earnings?
It's not a total surprise. Clearly, we are disappointed. We would have preferred to keep managing the money, and there's still a possibility we will manage the money. So I think it's important to say they're reviewing their arrangements. You know, as it's less than 5% of revenues, but it will have an impact on profits, but not. This is not catastrophic for the business, but just you know, one of these sort of blips you go through.
But your share price is down 7.3%, so obviously investors are taking it, you know, badly. Martin Gilbert, can you tell us why you think this was a fraught relationship or a relationship that didn't go to plan?
I think, look, we've known about this for 6 months. I mean, we clearly Lloyds, Scottish Widows feel we're competing with them. You know, that they're obviously entitled to that view. But the rest of our business is doing really well. We've merged the two companies to create a world-class investment company. I think the merger's going really well. This was obviously one of the things that could go against us. But as I said, look, I think let's be clear, they're reviewing their fund management arrangements. But against that, we've done a great job for their clients. So we're very proud of the track record in managing the money. And, you know, we'll continue to manage the money as well as we can for the next year.
Martin, a very good morning to you. It's Manus. Look, on days like this, the market's got a couple of salient questions. One, are you going to be allowed back into a beauty parade to bid for that business once it expires? Martin, as you say, you'll continue for the rest of the year. Will you be allowed to bid for that business and reappear in the beauty parade? I think, you know, that's open for us to discuss with them, and we'll give more details on that next week when, you know, we produce hopefully a strong set of results. So we'll obviously, as we've said, we're going to communicate with them. We're going to discuss the situation with them, and hopefully we can persuade them that we're still the best managers of their client assets. But there's a year to go in this contract, and a lot can happen in a year, Manus. Martin, you're preaching to the converted on that particular line in regards to what can change in a year. In the case of 6 weeks, the markets can turn on you quite virulently. Let's get back to the shareholders again, Martin. Dividends. I mean, the stock, as Francine said this morning, is down. The market is punching you quite hard on this loss. Any guidance for the market in terms of possibly having to cut a dividend or any other cash return programs to the shareholders?
No, you know, now is not the time to be giving opinions on those sort of things. But I would just stress this is less than 5% revenues. It's a low fee. It's got a very low fee, this mandate. As I say, I think it's good value for their customers, and we've done a great job. So, you know, obviously, at moments like this, you are disappointed. But yeah, you know, look, I've had lots of disappointments in my career, and this is just another one that we need to get over.
Give me a sense, Martin Gilbert, about the exact implications of this. I understand that this is a blip. I understand that you're trying to be positive. But the market is worried about something. Will there be any repercussions on job cuts? Will there be any repercussions down the road on how you manage some of the business?
No, I don't think so. I mean, it's also too early to give any sort of to discuss those sort of points. But yeah, no, I am positive. I think this business is in very good shape. Clearly, it's a blip. And I think the issue here is it's such a large amount of money as opposed to the revenue from it and the profit from it. So what I'm doing is I'm focusing on the revenue from it and the profit from it, rather than the headline amount of money that could potentially change hands sometime in the future.
Martin, as you say, the headline amount of money under management is perhaps what has caused the market to react as virulently as it has. But you need to go out now and win new business, win new block amounts of money to top up that revenue, to top up that profitability. Where is that going to come from? Where are you seeing the biggest opportunity for you to replace these kind of moments where business goes out the door, potentially goes out the door?
Well, I think the great thing about this merger is we have huge opportunities globally, especially in the US, Japan, Asia, Europe, UK. So it's a very, very strong business, and we have the products now that we've combined the two operations to compete globally. So we're in good shape, and you know, as I say, this was a mature book of business which was declining, as I'm sure you're aware. But look, I'm not going to hide from the fact that I don't like to lose any clients anytime, so it's disappointing. But as I say, it's important to keep this in context. It's less than 5% of revenues.
What can you tell shareholders today? So your share price is down quite significantly. Trading volume is quite big. When can you absolutely guarantee that actually this won't affect dividend policy in the future? Well,
that's, you know, as I said earlier, it's not something I want to give an opinion on today. But the company's in robust financial health, is how I would describe it, and you know, a 5% or drop in a share price is not hugely significant when you lose a big client. So you know, so we just have to get on with it.
Martin, let's just close this off. You've got to get on with it, head down. You've done it before. A very pragmatic CEO, certainly when you come and talk to Francine and I. What does this mean for fees in the business? Whoever's going to bid for this business, are they going to have to slice and dice on the fees to win it?
Yeah, fees are going down generally globally. So yeah, it is already quite a low fee, and you know, and whoever, including ourselves, may have to cut the fee to win this sort of size of mandate. But it's a very complicated mandate. It's not just one bank account that you can transfer a whole amount of money. So there are various mandates ranging from quant right through to buy and hold, right through to other asset classes. So it's a big, complicated mandate, which is why it will take at least a year for it to move, if it does move to anyone else.
Martin, does this make it more likely that you will focus on the U.S. and do a deal in the U.S.?
You know, Francine, you've heard me say many times that more than half the world's assets are in the U.S., and we'd like to be bigger in the U.S. Whether it's a deal or growing organically, we believe we have the right product set now for the U.S., and yes, our aim would be to expand there, expand in Japan, Australia, Asia. All of these markets are looking very, very good for us now.